Hey, it's Joe Solari here, and I'm with Craig Martell.
Coming to you live from the subarctic. Still dark at, it's 6 in the morning here. But it's dark and minus 20 on its way to minus 30 or something like that today.
And is this your official coming out after your surgery?
It is. This is my first live session after heart surgery, which was 1 week and a half a day ago.
And you're doing good?
Not dead yet. So we're going to go with sufficiently not dead. Might as well get back to work.
All right. Yeah. So we were going to talk first about end of the year. You survived another year, but you've got some things you have to resolve in 2019 before you get plowing into 2020. And to help authors really think about what they need to do with that year-end wrap-up, specifically with taxes. Now, we're not going to get into too much nitty-gritty. This is just like, hey, make sure you're checking these things out. So on my list, the first thing I had was the discussion about 1099s. So your obligation to supply 1099s and why you need to supply 1099s. And I think maybe you could share like your process around that.
I have an accountant, as people do. Mine just happens to be my niece. And I sent her the laundry list of folks I wanted to send 1099s to. I was missing one W-9. I got that quickly and got it over to her. And she issued all those 1099s and sent the 1098 directly to the IRS saying, here's who I sent 1099s to. So the IRS has that information knowing, hey, this person has this revenue. I did not send 1099s to everyone who had royalties because there's that gray area. Anything less than $20,000 if you pay electronically, it's still a gray area. And my dad's advice was IRS has never penalized somebody for issuing a 1099 when they didn't need to. So if in doubt, issue the 1099. They are actually moronically simple to send out and do. My accountant did $75,000 worth of 1099s in about 20 minutes because she's got her process down and got all the information in. But sending those, so if in doubt, send them. It's royalties over $10. It's services over $600, but not major service providers like Amazon or Facebook, not those folks. But I did send 1099s to a few of my cover artists and things like that. My editors get 1099 MISC. So I just do it because I expect to get audited. Little things like my personal revenue from authoring was $342,000 last year, but the way I run the conferences, I flow them through my business. That was an additional $350,000 in what looks like revenue. Now I've got receipts for that stuff for the $350,000 or whatever I took in. Or actually, a little more than that, but it's now the IRS is looking at me and saying, "Hey, you have $700,000 in income, and you have $500,000 in deductions." So I expect that'll trigger an audit because of my high deduction rate. Just because of the conferences, it's 100%. Whatever I take in, I spend and then some. So, and just the sheer volume of transactions that I have, but I fanatically keep records. So I have everything documented. I print reams of paper of receipts and have them just in case I need to refer to them. But I am ready for an audit. They're soul sucking. Usually it's just a line or two or something that you have to resolve, but it's still soul sucking because I sent a packet this thick and it was only one question. But it had a bunch of sub-chapters, and I had to send other receipts and copies of everything and other testimonials and got out. I mean, I was cleared completely. But still, it took me 8 hours to answer one question that was, I had zero revenue that year. I just forgot to check the box saying this is the last tax form I'm going to fill out.
Oh, the final return.
When I closed the business, I didn't check that box, and I got audited, and it was painful. Yeah. But so you have to be prepared for that. So The 1099s, I think that they have to receive them by January 31st, not just that they get sent.
Yeah.
So I sent all mine, I think the 15th or the 16th, but they sent it. Plus I have digital copies as backups.
Yeah. The other part of the 1099 process from a more proactive approach is this is a time for you to check to make sure you've got all your expenses accounted for, right? This isn't just about like, oh, I got to do paperwork at the end of the year. It's like, this is a time to really review and say, okay, do I have a good record of all of my expenses? Because if you don't have expenses, just like you were talking about, to charge against that revenue, Uncle Sam doesn't know that it's not profit.
Yeah.
Right? And they expect that you to pay, income tax on that. Now, when you think about it, to have a $700,000 business with $500,000 expenses, there's a lot of businesses that's a pretty reasonable profit, right? Like when you figure whatever the cost of goods sold is, if you're making widgets or whatever it is. So it's like, those aren't too out of line to have to buy $500,000 worth of stuff to make $700,000 worth of revenue, right? For $200,000 return. That's great. But if you don't tell them about that 500,000, or if it's in somebody else's case, if it's even $1,000 of costs that you miss out on, that could be a big deal in what you have to pay in taxes. So it's not just getting those forms done for, the tax obligation. It's a great time to make sure that you're really thinking through all of your costs. And one of the things that we've observed working with authors is they have their personal and their business expenses entangled. So take that time to untangle it in 19. So in 2020, you don't retangle it.
You absolutely. Now you can commingle funds, commingle being supposedly a bad word, but if you have flow through taxation or a sole proprietorship, commingling of funds is almost a guarantee, but you cannot commingle expenses. You cannot share expenses. You have to be very, very clear and focused and have individual receipts for your business expenses, because Schedule C is unforgiving if you try to deduct something you shouldn't.
And, this is what we are seeing. Authors are doing well. Things are going better. And they're ratcheting up their business. And, typically this happens around advertising. They're trying to scale up their advertising. So they're going to different credit cards where they're charging credit, their advertising costs to these different places, but they're also picking up meals for whatever, buying groceries. And then you get to the end of the year and it just gets overwhelming when you have to pick through all those things. And if you haven't been doing it on a monthly basis, go back 12 months. You always, as you're going through the year, you think, oh, well, I'll get this cleaned up. No, you need to do it when it's happening. And even if you're just writing it out on a legal pad, so you have some place to go back and see like, oh yeah, that's what that was, right?
I do it every single day because I have some 4,000, 5,000 line items of expenses.
Yeah. Well, yeah, when you're running a business, that's the other thing is like I think authors forget is when you have a bigger business, like if you're running $1 million a year business, they typically have an in-house bookkeeper or somebody that's doing that at a minimum weekly.
Yeah.
Right.
Yeah. Reconciliation, always.
Yeah. And if you don't, it's going to be super, super time consuming and hard at the end of the year. So that was the one.
And you're going to miss stuff because if you miss that $1,000 receipt, which if you made $250,000, it's not unrealistic to see $1,000 just disappear. And if you forget that when it's deductible, you're going to pay $400 in taxes on that money.
Well, we've had instances with one of our clients that's at that 7-figure mark where, they had a big year. They didn't have some very good tax guidance and help. And when we got in there, when we got done, not only did we find stuff that was expense related, but because of how we did it, we shifted their tax bracket. That's how much was being missed, right? So
Yeah.
like even the amount of money that they have to pay changed because we shifted them down a tax bracket.
Yeah. Yeah. You change 5% on $1 million. That's real money.
Right. Like, so that's where this thing, you know, when you're making that kind of money, you kind of feel like you have some room to make mistakes, but these are bigger mistakes. The other thing I wanted to make sure we hit on this tax piece is, if you had a big year, did you put in enough in your tax estimates to cover that? Because if you haven't, you really need to be looking at that right now and getting caught up and making sure you have the cash. And maybe you could talk a little bit about like your first big year and kind of like how you manage your tax estimates.
I was not required to send my estimates when I did. I started a year prior. Usually you have to make money for a while and then you start your estimates. But I started the estimates before, and simply based on my natural growth, IRS said, here's what we think your next year should be. And I'm like, oh, okay, I agree with that. And so I just went with what they did. But my initial tax estimate payments were based purely on, I was looking at, here's how much I made, here's the profit. So I had a lot of leeway. One month I sent a little bit, and then the next quarter I sent a lot because I made the money. And I tracked through that way. And then the following year, once the IRS takes over, they give you a set amount each quarter. So you get to pay that whether you have a down quarter or not. You still get to pay that estimate as they designate. So once the IRS starts telling you, here's what you need to pay, you have to pay that, even if you're sucking. Unless you get that re-wickered, and that's phone calls and stuff like that.
You have to go and show them that there's been a change in income.
Yeah.
But on that, especially this time of year, like if you're an author that's had like a crazy year, like it turned out to be a 6-figure year, you've never made that kind of money before, and now you're in a situation where you haven't made any estimates at all or very low, you have a tax liability. And as far as Uncle Sam's concerned, the fact that you didn't pay it before December 31st means that you owe a penalty and interest. If you're waiting till you get your taxes done, don't be surprised when whoever prepares your taxes says to you, hey, you owe a boatload of money and a penalty and some interest. And because from what you just said, Craig, now the IRS thinks that's the kind of money you're going to make every year in perpetuity. At least for the next quarter, they're expecting you to come up with 25% of that times 1.1. Right.
So here you are. You wait until the end of days. You file your taxes on April 15th, and you owe, let's say $100,000. Guess what? On April 15th, you're going to get an estimated bill for $122,000 or something in addition. So you're going to look at that and say, holy shit, I just got murdered on my taxes, and they're making me pay double. Yes, they are.
Yep.
So you need to start putting that money away right now if you haven't, and you should have been all through the year. And that's one thing that we're consistent on, because last year at this time I said, hey, look for April 15th when the panic starts saying, oh my God, I can't pay my taxes because I never put the money away. And every episode, I think we say, make sure you put your tax money away, because that's Uncle Sam's going to get it one way or another.
Yeah. And if you're in that situation, putting aside, your personal disgust at having to pay that amount in taxes, from a purely business perspective, not having that cash around could be the end of your business.
Yep.
Right. If we're talking, let's say, just for an argument, it's you had to pay $40,000 in taxes this year, and now you got to pay, say, $50,000, say $15,000 in the first quarter. So you got $60,000 of cash going out of your business in Q1 of 2020. Can you pay your mortgage?
Yeah.
Okay. All right. Let's say you can. Can you continue to advertise? Maybe not. Right.
And then that'll impact future sale. And then now all of a sudden, second quarter is going to suck. And
Yeah.
because the non-advertising that you don't, the advertising that you don't do in first quarter will affect your second quarter revenue.
Yeah.
So it is so critical, and has been every single time we've talked, is make sure you set aside, because that's the one that will hurt you the most. And now if you're using your revenue to pay your mortgage and do those things, that's okay. But when you're reinvesting in your business, you have to carve out a slice. You can't reinvest 100% after taking stuff out and not setting anything aside.
Absolutely. And, I'll give an example of this. So we have a client that's a 7-figure client. And at the end of the year, we're figuring out what we're going to do around taxes. And the decision that we made was on a significant chunk of profit. We were just going to pay the income tax. And we weren't going to do any kind of tax deferment as far as like moving it into retirement, because we had an opportunity to do that. And of course, the finance, retirement people are like, hey, we can save you all this money in taxes. And it's like, yes, but we need that money to run this business, right? And because it's an S corp, now that we've paid the taxes on that, we don't ever pay taxes on that money again.
Ever.
Right?
That's right.
But it's there for us to use. And we've got a really ambitious plan for 2020 that needs that working capital in the first quarter. So let's pay the taxes. We got the cash. Everything is smooth. But if we push that money into something that was tax deferred, and this person couldn't touch it till they were 57 and a half, that's not a good strategy for the business.
Yeah.
So that's the other thing, is like sometimes just paying the taxes is the best business decision, so that you have that working capital to reuse over and over. Any other last thoughts on taxes?
No. Pay your debt to humanity. I mean, everybody has to pay them. You can hate it. That's okay. Just like most people hate the business side of writing. You can hate it, but you just need to figure out how to do it well enough so you can get back to writing.
All right. Thanks a lot. That's our public service announcement for taxes for 2019 and 2020.